Any organization or a business that has its product shipped to another country or another location to be sold, okay, on its behalf, okay, by the agent, okay, is involved what we call consignment of goods. So basically, in this class, we're going to be looking at the accounts prepared for such an arrangement where an organization will ship his product to other what country or other location or other state, okay, to be sold by its agent. So here we have consignment account. Now, I already explained that consignment of product is where a product or goods is shipped from an individual, okay, to his agent to sell on his behalf. So the person shipping the product is called the consignor. The agent is called the consignee. So the account will prepare to record transactions involving individual known as the consignor, okay, and his agent known as the consignee for a particular period is what we call the consignment account. So the consignor and the consignee basically, okay, live in different location. It could be in the same country or different country, but the idea here is that the consignor is sending his product to the consignee to sell on his behalf. So basically, the consignee gets commission for doing that. So the accounts are prepared from two perspectives: the consignor's perspective and the consignee's perspective. So the idea here is that the consignor, okay, it's also a business that is operating on its own. So it also operates and prepares the account the normal way. That's the trading, profit and loss account, and the balance sheet. But the idea is that the moment part of the product is sent to somebody else, which is the agent, to sell on his behalf, there's a need to identify the profit that is made on that product that has been sent out. So the product that has been sent out is the consigned goods or the goods on consignment. So the goods on consignment need to be accounted for to know what the profit made on the goods on consignment. That would now be taken to the general profit and loss account of the business. Now, one of the accounts prepared is what we call the goods on consignment account. So basically, what we are trying to achieve with this account is to know the cost of the goods sent, okay, to the consignee. So because eventually the goods will have to be transferred, the cost of the goods will have to be transferred to the trading account, but we have to know, the cost of the one that has been sent to the consignee, that's the agent, is the consignee now. So the account where you find or derive the total cost of goods sent, okay, to the consignee, okay, that is on consignment that has been shipped to the consignee, okay, is the goods on consignment account. So this is what it looks like. I say goods on consignment account. So what are we doing? Basically, we're trying to account for what? For the product that has been sent on consignment. So here we're looking at an example where the business is into wristwatches. So you can see on the 1st of March 2019, we have goods sent on consignment. Okay. On the 1st of June again, we have 2,200 units of what this was sent on consignment. So basically, at the end of the year, the total goods sent on consignment, which is at cost value, will be transferred to where? The trading account of the business. Now, another account is what we call the consignment to the consignee account. Okay, so here we are assuming that the consignee's name is Debbie. So we can just say consignment to Debbie's account. Okay, so whatever name that the consignee is what we put here. But the idea here is that we want to be able to achieve the profit that is derived, okay, on the goods that has been sent to the agent. So here we record the sales made by the agent, and we also record all the expenses, including the cost of the product sent. So at the end, we'll be able to derive the profit made on the goods sent to the consignee. So here is how it looks like. You can see consignment to consignee. So the consignee's name is Debbie. You can just say consignment to Debbie. Okay. So 1st of June, sales, okay, sales by the consignee, which is what? Debbie, okay. So what we are saying here is that we have what? Sales by the consignee, Debbie here. So we have the sales. She made some sales on the 1st of June, made some other sales on the what? 1st of August. Okay. Now here we have the expenses. So this is the cost of the goods. Okay. So we have shipping and transport, clearing, landing charge, selling and distribution, commission, and all that. So basically we have the sales made here by the consignee and all the expenses, that the expenses or the cost incurred by both the consignor and the consignee. You can see Debbie here. These are the ones made by the consignee. So we put them together. Whatever we get will be the profit that we're going to transfer to the general profit and loss account. Remember, I told you that the business has its own activity, so it prepares its what? General profit and loss account. But the consignment, we must know the what? Profit made on the consignment. So that is what goes to what? The general profit and loss account. Now, the consignee's account basically is the agent's account, okay? So we want to know how much is expected, okay, from the agent, how much is expected from the consignee. That's from the perspective of the consignor. Since goods have been what? Shipped to him, okay, we want to know how much is due from him. So basically what you see in this account is what we call the amount that is what? Due based on the sales made by the consignee and the expenses that the consignee has incurred. So basically that's how we get what is due from the consignee. So as you can see, sales, consigned goods. This is consignee Debbie from the perspective of the consignor. So we have sales, consigned goods here. These are the sales made by what? The consignee. So he or she also made some expenses. She paid for clearing, she paid for landing, she paid for selling and distribution, and then she took her what? Commission. So what happened? By the time you remove what? All the expenses she incurred from the sales made, that means she's expected to what? Pay this into what? Into the bank, or send a draft, what they call bank draft, okay, to the what? Consignor. So basically from the consignor's perspective, this is what is expected from the what? Consignee. Now what happens is sometimes it is possible for the product sent to the consignee, okay, not to be what? Entirely sold. And then as at the end of the period where the consignor is preparing what? Its general profit and loss account, there's a need to what? Adjust for the what? Unsold product by the consignee, so that you don't capture profit on product that has not been sold. So basically this helps us to what? To adjust what I call the consigned goods, okay, or goods on consignment account, because here you want to know exactly what has been sold and what has not been what? Sold. So that you'll be able to recognize the right profit on the what? On the consignment. So what we do here is that once they are unsold stocks, we adjust for it, okay, at the cost price in the what? Goods to the consigned goods to the consignor's account to derive what? The profit actually. So the consigned goods to the consignee's account, I beg your pardon, to derive the profit actually earned for the period. So to repeat that again, what I'm trying to say is that where you have unsold goods that is on consignment, so what we do is to adjust for it so that we do not capture or recognize unrealized profit on the what? On the stock, and then we adjust for that in the what? Goods consigned to the what? Consignee's account. So this is what it looks like. I've already explained consignment to the consignee's account, okay, where you have sales. So basically what we are saying here is that the account here is the same thing as the consignment to what? The consignee's account, and then you have sales by the consignee. You can see Debbie here, So we have unsold goods at cost carry down. Okay, so that's how we adjust for it, and then we still go ahead to what debit all the expenses, including the cost of the what of transporting, clearing, selling, and distribution, and whatever expense incurred by both parties. Put it here to get the what profit that will be transferred to the what general profit and loss account. So you can see that this carry down here is coming down here as what brought down in the following year. So what now happens is that it will now be sold by the consignee again, and then we will do the necessary what preparation, and then debit any expense incurred in selling the unsold item in the following year, and then pay out the commission, and then recognize the profit in that year. So basically what I was saying is that where there is an unsold product, we don't recognize the profit in the year that was not sold. Okay, so we try to adjust for the unsold product and then transfer it to the following year where it will be sold, or the next period where it will be sold, and then recognized in the report of that very period. Now, this is the consignee's perspective. The consignee is the agent. Like I said, the agent as well has its own business. So you can have him preparing his own trading profit and loss account. But so long as part of the product he's selling belongs to someone else, which is the consignee, so he needs to also account for those consigned products. So what it means is that he wants to know the commission that he has earned on the product he's selling on behalf of the consignor. So it is a commission that he takes to his own his own general trading profit and loss account. So basically he also prepares his own account, but the commission on the goods that does not belong to him is what he wants to get, so that he'll be able to take it to his own profit and loss account. So here you have goods from consignor. So we're assuming that Sophie is the name of the consignor. Okay, so this is Debbie's account. From the consignor's perspective, we assume that the consignee's name is Debbie. So this is Debbie's perspective now. So the consignor is what? Sophie. So the account now, goods from consignor account, basically we want to derive the amount payable to the consignor after the transaction. The consignor here is Sophie. How much am I going to pay him after selling the product on his behalf or on her behalf? So the account that helps us to achieve that is the goods from consignor account. So as you can see, we have this is goods from consignor. This is goods consignment from consignor. Sophie is the consignor here. We can just say goods consignment from Sophie. Okay, so we have debtors. Yeah, debtor is the customer that the consignee, which is Debbie, has sold the goods to. Okay, so this is more like the sales in the hand of of the consignee, which is Debbie. So Debbie makes all her payments. You can see just her payment is here. From her own perspective, she only records the payment expense that she has incurred, okay, against the sales made. So at the end of the day, you get the amount that you have to pay Sophie. Now, this is the account that shows the commission that has been earned by the consignee. So in this case, we are looking at Debbie's perspective. Debbie in this scenario is the consignee. So what is the commission that Debbie has earned on this transaction? So the account that we get that is the consignment goods commission account. So as you can see, we're assuming this date now, consignment goods, this is the commission made. So you transfer it to where? The profit and loss account of the business. So this is a quick terminology that is used in consignment. We call it del credere commission. So basically, to make it very fast, the consignee, which is the agent, sometimes, since the goods can be sold on credit. So what the consignee does is to pledge or guarantee that the amount that is being owed by the debtors will be paid. So in order to motivate or to encourage the consignee, he gets what they call the del credere commission. So the commission that he gets for guaranteeing the payment, payment of the debtors or customers to whom the consignment of goods are to be. So that backing that the debtors will pay, the commission that the consignor gives to the consignee for guaranteeing, that's what we call the del credere commission. So the consignment debtor account, this is from the perspective of the consignee. So basically, these are the people that the goods have been sold to. that are owing the business. So they're expected to pay up so that cash can be transferred to the consignor. So you can call them consignment debtor account or consignment customer account. Okay. So here you see the sales to them, debit them consigned goods, and then when they pay, okay, pay into the bank of the consignee. So basically, this is double entries, what we've been doing. If you don't understand double entry, go back to double entry classes for asset, liability, income, and expenditures. It makes it easier. Okay, we're only accounting for a part of a particular product. Okay, that's what we're doing. Okay, so technically we're still using, the idea of debtors, creditor, product, income, expense, and all that. So here, goods have been sold to the debtor, you debit them. When they pay, you credit them. That's what we're saying here from the perspective of the consignee. So here is an illustration, okay, for consignment. So let's go. They say on the 1st of March 2019, Paddy, a trader in Port Harcourt, shipped 3,000 packs of Swiss shoes to GOF in Ghana. The cost of the shoes was put at 35,000 per pack. Paddy paid carriage to the shipping destination to the tune of 250,000. Insurance and other receipts paid by Paddy grossed 125,000. On the 3rd of April, Paddy received an account of sales from GOF showing that 2,500 packs of shoes have been sold for 45,000 naira per pack. GOF paid duties worth 150,000 per pack. GOF also paid 105 for sales and distribution. GOF was entitled to a commission of 10% on sales. The balance on the net amount was transferred to Paddy's account as at when due. So this is a consignment. Paddy is the consignor, GOF is the consignee. So Paddy is in Port Harcourt, GOF is in Ghana. Paddy has sent what? Goods, which is 3,000 packs of Swiss shoes to what? GOF in Ghana. Okay, so what do? We have goods on consignment account. So basically, we want to know the cost of the goods that are on consignment. That will go to the general trading account of what? Of Paddy. Okay, so what do? Goods on consignment. This is 3rd of January, okay, or 1st of March, or 3rd of what? So basically, the question says 1st of March. So we have 1st of March 2019. Consignment of goods to who? GOF. So what was consigned? We have 3,000 packs of Swiss shoes, and the cost of it is what? 35,000. So if you do 35,000 naira multiplied by 3,000, you have 105 million. So this is what you're transferring to the trading account in April. You see, now we have consignment to GOF. I already explained that the consignment to the consignee shows what is expected, okay, to be profit on the consignment. So what do? We compare the sales made by the consignee, okay, against the costs on the consignment. So we have consignment to GOF. So we have sales by GOF. You can see here, he said what on the 3rd of April, Paddy received an account of sales from GOF showing that 2,500 pairs of shoes has been sold for how much? 45,000 naira per pack. So if we do 2,500 times 45, we have 112,500,000. So what are the cost of the consignment? What are the costs incurred? You can see that goods on consignment at cost is 105 million. We already know how we got that, which is 35,000 per pack times 3,000 packs. There was carriage and shipping paid by Paddy. Paddy paid carriage and shipping to the tune of 250,000. This is 250,000. He also paid insurance and other logistics to the tune of 125,000. Then we also told that that GOF paid duties of 150 naira per pack. So I guess import duties. So 150 times 30 will give you 450,000. Okay. So basically, if you do 150 times 3,000, you have 450,000. Then the next one, the commission that is payable. They said GOF was entitled to a commission of 10% on sales. So 10% of the sales, this is the sales. 10% of the sales is what? 11,250,000. Then there is sales and distribution. They said GOF also pays sales and distribution of 105,000. We have sales and distribution of 105,000. Now, here is the jerk, or here is the logic, or here is the point. Okay, remember, what was sent to GOF is 3,000 packs. GOF sold what 2,500 packs. That means that what 500 packs are yet to be what sold. So we have to account for that 500 pack as the unsold stock. Okay. So the question is, what cost are we using? Remember, the cost of the goods has to be what the total cost incurred to put it at the place of what sales. We already explained that in our previous class. Okay. So here, the cost of the product and other costs incurred to take it to where it will be sold will form the cost of the what product. So you're going to pick your calculator now. You're going to have to add the goods on consignment, the carriage of shipping, insurance and logistics, okay, and the duties, because these are the things that are incurred directly in bringing the product to where it should be what sold. When you add them together, you divide it by what? By the number of what packs, which is what 3,000. That will give us the cost per pack. So that's about 335,275. What we've done, I'll say it again, is 105 million plus 250,000 plus 125,000 plus 450,000 divided by what 3,000. That will give us 335,275 per pack. So we are yet to sell 500 packs. So we have unsold goods carried down, which is 352,700 times 500, which is what this 17,637,500. That's the unsold what product. So basically, when you add all this, you have this, and then when you take out all this, you have the profit on the what consignment. So this becomes a brought down here that will be sold the following what period. So as you can see, this becomes the unsold goods brought down, which is 17,637,500. So we'll be able to get the profit on the goods actually what sold. So we now have the consignee. The consignee now is GOF. Okay. What we want to now want to know how much we expect from him as what transfer to the bank. So we have sales made here to be 112,000 what 500. Okay. So we have 112,500,000, which is the sales made by GOF. And then he paid somewhat expense on behalf. He was one that paid the duties. The question said so. 150, okay, per pack. So that's 450,000, 150 times 3,000, 450,000. Then the commission, which is 10% of the sales, 11,250,000. Then the sales and distribution that he paid, 105,000. When you add all this and take it out of the sales, he will transfer 100,695,000 to who? To Paddy, based on the goods that has been what sold. Now this is the same question, but now we're preparing the account from the perspective of what? Of GOF. Okay, so everything remains the same, but now we're looking at it from the perspective of GOF. Okay, so what do? We have book of what? GOF. Consignment from who? Paddy. So consignment that we sold to debtors, 2,500 units times 445,000. That's 112,500. Now, what are the expenses paid? Duties, commission, sales and distribution. Now, this is a transfer to Paddy, 106.95. So this must be the same thing that what Paddy has in his book against what? Against the GOF. So we have it here, 106,695,000 to be paid to what? To Paddy. Then we now have the consignment commission account, which is the commission that has been paid towards to the consignee. The consignee here is GOF. So we have 30th April 2019 consignment word from Paddy, which will be 11,250,000, which is 10% of the sales. That will be transferred to the profit and loss account of what? GOF, the general profit and loss account. Then we have the debtors. Okay, the debtors are going to pay based on what they have they've bought. So we have sales by GOF to the debtors, 2,500 units, which is 112,500. So that's what they're going to pay into the bank of for GOF, 112,500,000. 112,500,000. Okay. Now let us know how much that GOF is owing Paddy now. Remember, 3,000 units of shoes were sent, but now we're saying that 2,500 packs have been sold. That means it's remaining 5,000. So we know that from what GOF's perspective, the selling price, which is the cost from GOF's perspective, basically is going to be what 45,000. So we have 500 okay, units, yeah, unsold. So you're crediting party with it because you're owing. This is based on the fact that we have already transferred, the amount due on 2,500 packs towards to party. So basically, we have the consignment here, which is 500 units left unsold times 45,000, which is 22,500. But remember that in this very value, GOF has commission, but he too cannot realize the commission because he has not sold the product, so he's going to make provision for it. We can decide to just leave the 22,500,000 in that account, report it as what? As payable in the balance sheet. But okay, we know that total amount is not what we are owing party, so we have an unrealized commission in that payable, so we take it out here, which is 10% of this 2,250,000. So we can get the actual balance that we are owing party. So we have it there. Okay, so this becomes the unrealized commission from party's payable account. You can see it there, balance carried down, balance brought down. So basically, what we are doing is still double entry. Payables is your payable, creditors. Unrealized commission is just like saying prepaid income. It's a liability. Okay, so it's taking the same behavior as what? Your payables, credit balance, credit balance. Consignment debtors, they are debit balances if they are owing and they are yet to pay. And when they pay, you create them debit the medium of payment. You can either be what? Bank. So basically, what we have done here is to show the account from the perspective of the consignee. Plus, we've been able to look at the consignment account. The consignment account, we explain that the account that we prepare to record transactions involving an individual, which is called the consignor, shipping or consigning products from his location to another location where his agent, called the consignee, resides. So the agent sells the product on his behalf and then remits the cash to him after deducting a particular commission. So we looked at all that, and we also looked at preparing the account from the perspective of the consignor, which is the owner of the business or the owner of the product, and the consignee, which is the agent in this transaction. So we're able to look at the various accounts, from their perspectives, consignor's perspective, consignee's perspective. So sometimes we say from the books of the consignor and from the books of the consignee. So we'll give an illustration, to be able to explain transactions involving consignment of goods. Consignment of goods is the shipment of goods from one location to another, where the consignor, which is the owner of the goods, agrees with the consignee, which is the agent, to sell on his behalf at an agreed commission. So you can go through the illustration. It's quite simple. It's just double entry that we're doing. Okay, and then if you have questions, you can reach me on 08136506356 or send me an email, jeremiah.doso@gmail.com. You can drop questions in the comment section. I'll be there to reply with the right answers. Examination is about to commence. I understand that there's resumption order for those writing exams. So start preparation. Have questions, chat me up. Go to my Facebook page, like my page, follow my page. Okay, you have my WhatsApp number there. You can chat me up and discuss questions. You can call me. Okay, when you have difficulties, we can always quickly review it and then you move on with your preparation for the examination. Thank you.